How's it going, everyone? Brian Hoops with Midwest Market Solutions. This is our latest internet video series. It's Monday, March the 23rd, 2015. Thanks for joining us, everybody. We appreciate all the feedback you give to us. Now, if you like these video series and you want to have them sent directly to you or notified when we present one, put one up on our site, you can just subscribe to our YouTube channel, Midwest Market Solutions. Find our YouTube channel, and if you subscribe to it, it'll give you a link whenever we post a new series. Otherwise, go to our website, MidwestMarketSolutions.com, where we post these very regularly. Before we get started here, we always want to remind you that everything we talk about is copyright of our company, 2015. And also, there's a risk of loss in trading futures and options, and it is substantial, and you must consider whether it's a suitable investment for you. Past performance, whether actual indicated by simulated historical tests of strategies, is not indicative of future results. The information we provide is taken from trades and services and other sources we believe are reliable. We do not guarantee the information is accurate or complete, and it should not be relied upon as such. Trade advice reflects our good faith judgment at a specific time to change without notice. There's no guarantee the advice we give will result in profitable trades. All right, let's look at a cattle trade that we exited today. This is April cattle futures, and you can see, the market up and down, pretty big price moves. We put a low in here on this day back on February the 24th, and we had a rally, and it looks like we've changed the trend right in this area, because you can tell we're above the trend indicator that we use, plus above a 21-day moving average in this case. So it tells us the trend has turned higher. We were wanting to be buyers right in this area. Market had pulled back for a couple days, and this is where we bought in, right in this area. Around 154.45 or 50 is where we got filled. Now, the way we handled it was simple, using our target shooter developed by Larry Williams, and our software's program, very simple, has this thing on here, and so all we do is draw it. And if you prefer, it's just a Fibonacci numbers. So these numbers projected a potential target to the 158.60, the 160 area, and then potentially 162.35. So somewhere up in there was where we hit our target. We almost got filled here at this 158.60 area. We were able to raise it a little bit and raise the stop. So we exited here at the 160.02 area. And so we'll use this chart tool, 160.02. We got out at 159.95, and that gave us about $2,200 of profit. 2180 I think was our exact number. So we had pretty good trade right in here. We got out of this cattle. Now, would we want to short this market? Well, it's given us no indication that we want to be short. But if you do notice, look how far away from the moving average we are as of the close. Moving average today sits at about 153.57, and we closed at 161.35. So, roughly it's an $8 difference between where we closed and the moving average. Very rarely have you seen any times where we were that far apart. Here is one where we closed at 148.35 and the moving average was 158.27. So there's a $10 difference between the close and the moving average. So that was pretty much an extreme case. Here it's what we said, $8. It's not anything that we want to sell, but it tells us that we're probably so far away from a moving average that we're going to have some sort of a consolidation correction like we had back in here. So would look for this market to consolidate, correct, and have some sort of a pullback. And then at that point, I think we can get long again, but we'll use, of course, a different month than April. Probably go June or August, something like that. Okay, so that is what we did. Here's some upcoming spread trades that we like, that we want to look at a couple charts of. So we'll get our spread charts up here as they load. And want to remind everybody that what we talk about today, always subject to change, depends on market movement, market information, that sort of thing, as we go forward into the future. And always check out our website, MidwestMarketSolutions.com, and our newsletter for more market information. As it happens and develops, we'll keep you up to date on everything that transpires. Okay, so here's a couple spread charts that we want to look at. The first one is if we can get the charts to flip over here. Okay, the first one is the hog spread between June and July. You can see the spread hasn't done much of anything, kind of trading between 20 under and 80 under, June under the July. More research has indicated next week they want to do this spread by buying July and selling June. This will be a bearish type spread. You're selling the front month, buying the second month, and that spread should widen out. So if we get the spread up into this resistance zone, somewhere in this minus 40 to minus 20 area, I consider that to be resistance. I think that would be a place to put this spread on, and then hopefully the spread would widen out. That is a more research spread that they are going to put on. They say it's 93% accurate. Another spread that I want to look at is meal spread. This is May against September meal, and in this area right here we can draw a support area right in about the 4.3 area. It's at 6.1, so we're going to need the market to pull back and consolidate back in this area before we would be able to get long. Now, more research puts this trade on Wednesday, said it's also 93% accurate. So it's something I think we can look to see if we get some sort of a pullback. Meal is a nice trending market usually. Commercial setup's pretty nice in this meal, and so we want to try and get long somewhere near this support 4.3 area. The narrowest it ever got was about 3.7, and I don't think we're going to get down in that area again. So we're going to look to get long and for a move up at least into this area of $4 to $5 on this spread. I think is a realistic possibility. One spread that more research has on that I took off from the standpoint that they want to put on this July corn versus December corn spread, and that's what this chart represents. This is July versus December, and they want to sell July by December. So it's an old crop, new crop spread. This spread has been trading as wide as 17.5, as narrow as probably 14 since January. It doesn't look like a lot of profitable opportunities. We thought about putting it on in this 13 to 15, 14 area. This would be the resistance in this area. Draw a little trend line here. If it got up into this area, I thought it would be a decent spot. I just don't think there's enough profit opportunities in here. Now, if corn rallies, it may be led by the July contract. And the reason that I think it could possibly rally, we're going to switch charts once again in here. We want to look at corn. So let's find our corn chart, and I want to point out a couple things. You look at this commercial index. This has gone into a bullish zone right in here. Here it was back bearish back in early part of January after the first year and prices dropped. We've now entered to a bullish zone in here, and it looks to me like we could certainly see this market creep higher from this area up into this 438 area without too much of a weather premium being put in. And if we get some weather premium, we could go back up and test the highs from last year. This was up in the $5 area, 525, 550. So potential to get back up in here as the commercials are bullish, similar to what they were back here in August. So yeah, I don't really want to press the short side of corn at this point based off of their bullish reading. This is the first time they've been bullish since, if you follow this green line, since back here in the early part of January 2014. They were in the same bullish last time, and we saw we had a rally that took us from about 439 into the 546. So possible dollar rally potential. I don't want to be bear spread if we have a dollar rally potential that takes us from the 389 area to the 489 area. So just wanted to throw that out there of a trade that we are not looking at doing any longer. All right, I hope you have enjoyed this commentary, and feel free to contact any of our offices. We have 4 of them around the Midwest to serve you. Give us a call if we can help you out. This has been Brian Hoops for Midwest Market Solutions. Have a great day.